Welcome back. You're watching the Global Dialogue, and we're in conversation with the global CEO of HSBC. I know that you've been asked this question and you've answered it to say that you don't believe that sacrificing certain businesses at this point in time makes sense, that the future should continue to look like where the bank currently is, of course, expanding your various businesses. But if there were to be more investor pressure, do you think that that is an eventuality at some point that you are going to have to acknowledge and deal with?
No, I don't believe that's the case, and it's not the investor pressure I'm feeling. Our institutional investors believe in our international model. Our customers believe in our international model, and the facts support it. 15% growth this year in international activity, whether it's trade or overseas account opening, is a supporting piece of evidence. So I believe we have a good business model. It's worked well for 157 years, and it will continue to work well going forward.
So while you don't envisage a split of any kind, but what changes, if any, are you likely to make within the bank, and especially, you know, on being able to open into new markets, on digitization, for instance, which is, of course, a big theme that most people have sort of accelerated their moves towards digitization post-COVID. You know, some of those aspects, how are you dealing with them?
Digitization is critical. Last year we processed $660 trillion of payments on behalf of our clients, 98% of which were fully digitized, straight through processed. We're one of the biggest payments organizations in the world, one of the biggest foreign exchange houses in the world, and the biggest trade bank in the world. So you can't be that organization and not be committed to digitization. You can't cope with that volume in a resilient fashion if you don't commit to digitization. I think it's a massive unlocking of economic potential, and that's evidenced here in India. And I applaud what the government have done in building a digital architecture for the economy by the government to allow the businesses of India and the world to create business models that would not be possible without that digitization. So we're fully committed to it. We're also looking to do the same thing, and I think we've underinvested in digitizing our global wealth proposition, and that's the journey we're now on. We've done a lot on corporate banking. We're now doing much more on international retail and international wealth management, and there's a significant investment program going into that of, I think, around about $2.5 billion over the next few years to achieve a truly international retail and wealth management business.
You know, you talked about foreign exchange, and let me ask you about what's happening as far as the currency markets are concerned. Do you believe that the dollar strength, the kind that we are seeing today, is likely to continue?
At the moment, I would say so, yes. Dollar is very strong, but that's driven largely by the interest rate yield curve at the moment. Also good economic prospects over the medium term in the US, and that is a challenge for other markets. But yes, I do believe there'll still be a strong dollar. M&A activity, do you believe that 2023 is almost halfway through 2022, but 2023, do you believe that we're going to see a tapering down of M&A activity, or do you believe that that's likely to continue? I think when you have this level of economic uncertainty and you have a readjustment of the monetary policy and higher interest rates, that's going to have an impact on M&A. It's going to have an impact on IPOs, because everyone's got to revalue the economy going forward compared to an economy that was based upon 0% interest rates. And some of the M&A activity that may have been possible with low interest rates will have different economics associated with interest rates, whether it's 2%, 3% or 4%. I don't think that's unhealthy. One could argue we had a little bit of a false market over the past 5 years, 3, 4, 5 years, because of artificially low interest rates. And some business models were attractive, you know, on an NPV basis. When you look at 0% discount rate, when you look at a 3% discount rate or a 4% discount rate, it's going to have an impact.
You know, you've visited Bangalore here in India, and of course a large part of the Indian startup ecosystem and the startup story is also linked to the digitization theme. What do you make of the Indian fintech story?
Oh, it's huge. It's exciting. I mean, we personally we now bank around 1,000 startups here in India. And I think we've got around about 43% of the unicorns as clients, which is great, and credit to my team for doing that. They've done that silently, in a determined manner, and in a very professional manner. And I met a number of them yesterday. I met a number of the fintechs and unicorns yesterday. Very exciting. What I love about it, huge intellectual property in their thinking, followed with great execution, and building upon the platform that the government have created on the payment rails, the digital identity, the enhanced bureau capability. And I think what you've got is very innovative business leaders, but also very strong execution models. And that's a powerful ingredient. Exciting, and we'll continue to support them in every way we can.
Including collaborating with them and partnering with them?
Collaborating and learning from them. We've got to keep learning. We're a 157-year-old institution. I learn from what they're doing, and hopefully we can help them in ways that, from our history and experience, we can help them grow as well. But collaborate with them, yes. Learn from them, yes.
Buy them,
bank
yes.
them, definitely.
Buy them, yes.
I'm not going to do that. I'm not going to go there.
But could that be something that you would want to consider?
Listen, we always look at opportunities to collaborate, grow, learn, and we have looked at acquisitions in the digital space and the fintech space. But let's see where we go. I'd rather be having a mindset of collaboration and support, and we'll go from there.
So as CEO today, and you said that, look, geopolitical flashpoints are not new and this is not an unusual scenario. What are the key challenges or the key risks on your dashboard that you're looking at today? What really worries you?
Clearly, geopolitics is one of the factors you consider. Economic growth is now a new and emerging challenge, and I think we've got a position for that, and the negative impacts that the inflation curve could have on businesses and people. We've got to be supportive. And then you always worry. I run a large global organization around over 60 countries in the world. You always have something high on your agenda, and there's always something you need to focus on. From my point of view, for HSBC, I'm as focused on continuing to improve the performance of the bank, improve its returns, improve its profitability, and improve its customer experience. So I got a huge investment program. I want to make it happen.
And the 12% return target on track?
Yes. I wouldn't have said it if I didn't believe that we can achieve it. And that's important. That's the first time in 10 years this bank will have reported a 12% plus return next year, if we can deliver that, and I am determined to deliver it. And that is an important milestone. And I believe that isn't purely predicated on rates. If you compare the yield curve today to the yield curve the last time the yield curve was at that position, our returns next year will be at least 400 basis points higher than the returns we had when the yield curve was here before. That's because we've improved the operating performance of the bank, the underlying leverage of the bank, and the operating leverage. So the returns we're getting is normalized rate. For me, normalized rates in a banking world is 2 to 2.5%. I don't think any bank business model should be predicated on enduring 3 and 4% interest rates. I believe it's right to have normalized interest rates 2 to 2.5%, and I believe at that level, with the operating leverage we've created, we can deliver 12% plus.
Mm-hmm. Let me end by asking you about some of the sort of new trends and that have been around for a while. What do you make about the recent sort of fall that we are seeing in cryptos, and do you believe that this is a story that's now on its way out, or it's a story that is going to see another revival? The move towards payments being digitized completely, and we're talking about central banks looking at digital currencies and so on and so forth. What is that going to mean? How does that change the mix for bankers like you?
Well, listen, I would class myself already as a digital payments house. At 98% of 660 trillion, you're digital. I'm a fan of CBDC. I think there's some good use cases for central bank digital currencies, particularly cross-border remittances for personal customers, and particularly SME cross-border payments. I think a CBDC architecture could help those two use cases tremendously. Crypto, I think I've made my views fairly clear. As a bank, we're not getting into the crypto world. Crypto trading, crypto exchanges. I do worry about the sustainability of the valuations of crypto, and I have done for a while. I'm not going to predict where it will go in the future. One of the problems with crypto for me is it's hard to predict where it's going to go in the future. It's too volatile. And as a product, I question the suitability of that product for many of the consumers in the marketplace today. So that's why HSBC is more negative on crypto than other banks. The underlying architecture and digital capability that underpins crypto, I think, has got great use cases. Distributed ledger technology, fantastic use case in tokenization of capital markets. So we're investing in tokenization, we're investing in CBDC, but I'm not bringing crypto product to the market for our clients because I worry about the volatility.
Noel, thank you very, very much for speaking with us on CNBC-TV18 on the Global Dialogue. We wish you the very best of luck and look forward to seeing you back here.
It's a pleasure. Thank you so much for having me.
Well, with that, it is time for us to wrap up this special edition of the Global Dialogue. We'll see you again. Till then, from all of us here, goodbye. Many thanks for watching.